Good morning, traders. This is Perry Wilkey with StartupTrading.com. It is Thursday, June 11th, 2020, 8:45 a.m. if I didn't already say that. It is the start of rollover. We'll get into that more in a minute. Looking back at yesterday's session real quick, you can see the Russell, right? Most of its day completely below the previous day's low, which is this green dash line. So nothing in the previous day's range. And it had printed some pie in the sky on Tuesday's close, right? That it never really it traded a little bit over the overnight, a little bit higher, but then just fell out of bed, right? This was the overnight low. It didn't really take out the overnight low either, though. Notice that we talked about these level fours several times recently, right? So we got down to this level 4 in the overnight session. We opened here, right? We traded back down, went through it, back above it again. Euro closed on this blue dash line, went back and forth, right? FOMC, little shake and bake, some fun for the algos and the market makers, I think, and the brokers, right? It was a broker day yesterday, unless you were really quick with the trigger. So as we look at the NASDAQ, as it continued just to flip everyone else off as it was making highs, Russell's making lows. The Dow and the ES, right, sitting here both in value. So as we look at the economic report, we're not going to get too much into the trade sheet today, but we had unemployment claims. I don't know what they did. We have PPI at 8:30. Who really cares at this point in time? We have a bond auction going off today at 1, but it's really at 1:01. If that minute makes a difference to you, you probably shouldn't be trading. And then we're not going to really get into the rest of this sheet. So last night I tweeted out that we had this 4-day balance up here, right? And we had some sequences we'll look at in a second, right? That the one I was looking at failed. The next one under it had a bid. They both had bids off of it. Had a bid off of it and really failed. So what I said was basically the low of the day was the 50 entry, and it was the 4-day balance for the most part. Of course, there's a few traders from Friday early that were above yesterday's bell low at 79.25 or 79.75, wherever it was. But that would be taken out. You had gaps to fill and targets to hit below this 4-day balance, right? This could end up being an island reversal. It could be it's time for maybe a little bit of a retracement. So just getting back down to the next one is 31.10. We've already accomplished that in the overnight session. So we'll get into more of these targets in a second. But what I want to do real quick is look at rollover. So on the left side, this is the current June contract. On the right side, this is the March contract. So we're going to go from M20 to U20 starting today on Thinkorswim toss. Tomorrow, the front month, if you just put /ES in there, it'll be the U20, right? I just want to point out right now there is an 11-point differential between these, right? The month that we're going to be, or the contract we're going to be rolling over into is 11 points lower than the current contract. So regardless, they'll look like wherever we close when we open, unless we, have an 11-point more rally up or down after we close, it's going to look like a gap down. So if we even fade it a little bit lower after the close, the gap's going to look bigger, but that's going to be what it's from if you are just looking at the continuous contract. So basically, any of your levels, once you start trading September, you can either go back and just load the ESU20 and get grab your levels from the dates that you got them from, or you can just, do a back of the napkin you know, quick and dirty, close enough for government work, subtract 11 from the levels that you're looking at, and that'll be, you know, from one contract to the next. So what I want to point out here is, you know, this is just looking at, we're basically back to where we were a week ago, right? This looks like an epic fall, and maybe it will be the start of a bigger retracement. But as we get down here, right, we're just right back to where we were last Thursday during the bell. Another thing that I wanted to point out that I didn't, if you just look at the last measured move, right, I'm going to zoom in over here on this side since I'm still on this contract. But if we just look at really the last measured move as far as days and swinging go, right, as we went from 2760 up to our, you know, 2333 basically, and you can get the exact levels, right? This is just back of the napkin stuff. So this halfway back is, you know, 2996. So right around 3000 just gets you halfway back of the distance that we've traveled basically since May 15th. So don't get too out of hand at this point with, you know, anything really going on. So as we look at this, you can see that we're already down near S4. Remember, only 1 out of 7 trading days, or 7 trading days a year, do you really substantially break and hold below a level 4 and go either, you know, to the upside or the downside. So you have to ask yourself, you know, is today one of those 7 days? If you're, you know, playing in there, the answer is probably not. It's possible, right? It's got a chance, but probably not. So although we will probably trade lower today after the bell, and we'll watch the 4B here in a minute, and we'll get some other targets on, we're likely to have a little bit of a retracement up and close, you know, a little higher off the lows today just because of being down here. And if we get some traction to the upside, which, you know, you got 4 days of losers basically up here now, that if you're long and wrong, and you got 4 days of them, that's a lot of weight. We've had some overnight trades go off, but I'm not looking at a whole lot of, you know, to take this back up even to yesterday's low right now. You know, anything is possible. The Fed could just start buying, you know, because I don't want to see anything go down. So as we look at all the indexes, we had underwater trades, not underwater closes, on both the Dow and the Russell yesterday. So what's that mean? Traders have to keep pressing it down, right, to get rewarded, and the bears need to defend to go get it back above that level. Well, or the bulls need to defend to get it back above that level. The bulls have failed. The bears have won overnight so far. But if you look at these level 4s here, and that's what I'm looking at right now, close to the in between 4A and 4B, in between 4A and 4B is the low. Not even to S3 yet, and just barely under S3 for the Russell. So one thing while we're here, I want to look at some bigger targets for the ES. So as we look at just the bell to bell that I put on here yesterday, before we go out, if we just look at from the low, and I'm just looking at bell action. Actually, I think I do have a, no, this is just bell action here. So from 79.5 up to the swing high right over here, we're sitting, you know, all the way back under this 3110 virgin point of control. And then we can start taking out these points of control, right? We can start taking out these untested levels. So we had 3110. So look for 3110 to probably trade during today's session if we're going to continue lower, just to, you know, test it, go back down. Then we got 3060 half. I don't think we're really going to get below 3060 half by much today, unless it's going to be one of those special days, right? And if we do, 3012 half is the next support, and you can see all the volume that's traded on here. If we do that today, that's going to be hard to get back under that level going forward. If we trade down to 60, come back up and close around that 20 to 3100 level, where it's going to be a little bit better. So I'll show you this on just the day 20-day time frame, looking at the 30 minutes what I sent out last night. The 21.4 of this is at 3,004. So on that draw that from the highs to the lows, so that's likely to get some support right around this, no matter how you look at it. If we do, in fact, get that down here. One other thing I do want to take a quick second to point out on the 1 year daily is if you go back into these charts, or any one of these days, sorry, since we've hit this low on March 23rd, I'm going to remove this draw just so it doesn't look so messy. If you were dumb and bought in a hodler, right? If you were dumb and you bought the high of any day, so that's the very worst trade location you can have since March 23rd. If you look at that and you go forward, you don't have to count more than 6 sessions where you were wrong before you started being handsomely rewarded, right? So if you got the worst trade location of the day, basically a week and a day later, you were handsomely rewarded coming out of this March 23rd low. So if you think about that, this way, right here on the 5th, we've got 1, 2, 3. So if we just get 3 days down, and 4, if this pattern continues, and 4 trading days from now, we could end up being above this high. It's about time that you don't get rewarded for just being throwing darts at a dartboard and getting rewarded for trading long. But we'll see. Just keep in mind that this pattern, and with the amount of money that the Fed and the Treasury are dumping in to this economy, that's really put a floor under it. But we're due for a little bit of a retracement, but how much we get, don't get too excited. Unless we get underneath 3,012 to, basically 28.43. Getting under 28.43, and if you look at it starting tomorrow, it'll be 28.32, getting under that going forward in the next contract. That'll be more monumental than anything else. Is just a run-of-the-mill retracement, although there's some money to be had picking up some of this on the way. So with all that that I just went through, we'll go back and look at the index profiles. Remember, we could be near the lows of the day as far as a closing price already for the Dow and the ES. The NASDAQ has been a little bit bullish, so if you're trying to short something, I would probably stay away from looking at entries on it, right? Why do you want to, if you're shorting something, why do you want to screw with the strongest indice? And then the Russell has had the most beta, right, lately, but the ES is definitely the easiest and the most liquid to trade, in my opinion. So that we've done that. So looking at sequences overnight, the bears are in total control, right? The last entry on the short side was around 5:30 a.m. and it just keeps going to targets. Looking at the NASDAQ, same thing. This was almost a 6 o'clock entry, going down to targets. Russell, same thing, around a 6 a.m. entry Eastern time, going down to targets. So now that we're there, where do we want to go? And, when I wasn't adding support resistance lines between basically 31.29.5 and 32.19, this is why. Because there was no support in here. So you can see when we hit, 29.5, it tried to stumble a little bit, and now we're back down to this 0375 level, and we'll see what happens there. I've got some minors down here. I don't have any real major support until we hit 30.27. These are going to be minors, and this can be the trying to catch a falling knife. So at each support level, no matter what technical analysis you're using, until this downtrend is over, you're likely to find a little bit of support, a little bit of a bid on a first test, and it just cuts through it like butter, or potentially go through it like butter, come back up, and now that support that should have been first test support is now first test resistance. So this is a, look for short only market. If you're scalping to the long side, the internals better be printing green dots on the upside for more than 15 minutes if you start trying to play that game. And the VIX better be at the low of the session for whatever you're tracking. So looking at the NASDAQ, and I am long, so I'm going to actually cut this short right now. Jack needs to get on here. It's 9 o'clock. Sorry about running late. I think we've covered some stuff. I gave you some stuff to watch for the ES, some levels. And just keep in mind that we're likely to go down and possibly test 60.50 today, but still close above 87, right? That would be, unless today's one of those 7 days where we just keep, going through prices and stay down there. Remember, we're likely to close near or above 87 today, so we're closer to the bottom, but it doesn't mean we can't trade much lower, and that's no reason to buy this. You guys have a great day. If you like this video, give me a thumbs up. I put my Twitter handle in the text of this video. You can follow me on Twitter at Perry Wilkey. And I did tweet out this short last night before futures opened, or right around when futures